Hey everyone. Big news on Nike this week. The stock popped after hours when they released their latest earnings. The quarter ending August. Nike earned 49 cents per share, beating the 27 cents Wall Street expected. And total revenue was $11.7 billion, up about 1% year over year. Investors like the surprise. Nike's shares jumped roughly 3% after the bell. So what's behind the excitement? It turns out Nike's comeback plan is starting to pay off in some key areas. CEO Elliott Hill has been pushing a win-now strategy that refocuses Nike on sports performance, especially running, and on core markets like North America and wholesale partnerships. In this quarter, those bets are paying off. Nike's running shoe sales surged about 20%. And sales in North America also grew. Wholesale revenue jumped 7% to $6.8 billion as retailers restocked ahead of new sports collections. As Hill put it, this quarter Nike drove progress through our win now actions in our priority areas of North America, wholesale, and running. In short, the bread and butter Nike shoes and markets are showing real improvement after years of lagging behind. That improvement comes after major changes under Hill's leadership. He's cleared out old inventory and reshuffled the company to focus back on performance gear instead of just casual styles. He also fixed relations with retailers. For example, Nike is back on Amazon after a 6-year hiatus and has made deals so its shoes are front and center in Foot Locker stores again. This means Nike products are getting prime placement both online and in key physical retailers. These moves help Nike reach customers more directly, which had been a problem under the previous strategy. Despite these wins, Nike's recovery isn't guaranteed yet. CEO Hill himself cautioned that we have a lot left to prove and that the comeback won't be perfectly linear. In other words, ups and downs are expected. Some challenges remain big. Sales in Greater China are still weak, described as facing structural challenges. Nike's Converse brand also saw a huge drop, 28%. In Nike's own stores and website sales, its direct business, were softer, about a 4% decline. As Nike's CFO Matt Friend warned, progress will not be linear, and headwinds like tariffs and consumer spending trends mean some parts of the business will take longer to fix. One major headwind is tariffs. Nike now expects about $1.5 billion in extra costs from U.S. import tariffs this year, up from a prior estimate of $1.0 billion. To offset that, Nike is even raising prices a bit, reports say U.S. Prices on some Nike shoes are going up a few dollars. Those tariffs are already squeezing Nike's profit margins. In Q1, gross margin fell roughly 3.2 percentage points to 42.2%, partly because of higher product costs and discounting. In short, rising costs mean that even though sales are growing in some areas, Nike's profits are under pressure. So what does this mean for investors? For a casual investor, takeaway is, Nike's turnaround plan is showing early signs of life, but still a work in progress. Strong growth in core areas like running and North America is encouraging. And the company is taking smart steps, clear inventory, focus on sports, rebuild retail ties to rebuild its business. On the other hand, watch the warning signs. China and Converse are trouble spots, and tariffs are biting into margins. In simple terms, Nike just pulled off a better-than-expected quarter, which is why the stock rose. But the CEO and CFO themselves remind us it will take time to fully turn things around. It's a positive step for Nike's comeback. Patience is still needed. We'll keep an eye on Nike's progress, especially how it handles those remaining challenges next quarter. Thank you for watching. Stay tuned for more updates on Nike and other stocks. And remember, this is analysis, not advice.